What are the benefits and risks here to Lyft being the first one to really tell investors how one should value a ride-hailing company?
Sure, I think there's a lot of benefits. First of all, because of the market shutdown, or the government shutdown, excuse me, there hasn't been an IPO in about over 15 weeks. And so there's a lot of pent-up demand to see a really big a tech company IPO. And so I think it's going to be well received. I think the company, Lyft, is doing very well. They have they're doing well. In the market, the press, people really like them. Their numbers they're good, and so I think people are really excited to see what's going to happen.
Yeah, just to add to that, I think they really want to go. Like yesterday, they want to come out because Uber is sort of waiting in the wings, and they don't want to have a situation where Uber is coming in and like sucking up all the air out of the room. They're sort of the bigger fish here,
and they really want to set the story.
Right. So they're rushing. They're trying to get this out quickly. They also don't want Uber to really define what ride-hailing looks like. They don't want them to define the story here. They want to be the ones to come out and say, this is our company. Let's focus on, we're a domestic company. We're not trying to be this global ride-hailing giant. We're doing things well here in the US. So it's important for them to get out ahead of Uber.
Right, so they have an opportunity to explain why the smaller underdog is a great investment, right? So, what have we heard from potential shareholders? Is there a lot of interest for this stock?
Yeah, the people I spoke with today seem really excited, and they're eager to see Lyft go first. So, it goes back to this idea that they want them to be out ahead, to set the stage. They don't want Uber coming in and dominating the story. But I think certainly on their roadshow, you're going to expect a lot of questions about Uber on Lyft's IPO roadshow and vice versa. Shareholders seem extremely interested in the company. You have Fidelity, who's already an investor in Lyft, so it'll be interesting to see what happens there, like how much they end up continuing to buy into the company, for sure.
And you're an investor in Lyft. Oceanic got involved pretty early on. So what did you see in the company back then?
Yeah, so it was about 2015 when we invested in the company. We have guys at our firm that look at the numbers. I personally look more at the relationships and the personalities and the story behind the business. And, hands down, Lyft has. People like Lyft. People want to see Lyft be successful. I took a Lyft here to get here, and everyone just can't say great things about Lyft and how they treat people, how they treat women and all of their their employees and the people that they ride with. And so I'm really excited to see where the company goes. I'm excited for the employees that I've worked with, the people that I've met in upper management. I think everyone deserves a really good IPO, and we've been waiting for 4 years now, and so it'll be really exciting.
And now both of the companies, Lyft and Uber, are losing money. How do you see public investors stomaching those losses?
I think a lot of tech companies are not profitable, but I know that Lyft is really working towards increasing their margins. They're trying to increase their market share within the U.S. They have a more streamlined strategy. They don't spend as much money as Uber, and they are really trying to, expand socially and consciously, and I do think that they're going to get there, but it's going to, I think they have to tell their story, but they're slowly getting there by expanding in all of the cities around around the U.S.
And how concerned are you, and potentially maybe you're hearing this from your sources, about the risk of regulation and some of these minimum pay requirements that are in very important cities like New York City?
That's a good question. I think you're going to see regulations in all sorts of different companies, whether it's ride sharing or the Airbnbs of the world. But they're all going to work together. I think at the end of the day, what they want to do is make transport more efficient in cities. They want to make it efficient. They want to make it, worth it, easier for the end user. And I think they're going to work with cities to make it the most efficient and pay what they need to pay and do the right thing.